This is Australia. It is one of the least affordable places to buy a house in the world. Its house price to median income ratio stands at 9.7 times, almost double that of the US, as wages have been unable to keep pace with the meteoric rise in prices. In fact, Sydney has a median price to income ratio of 13.8, making it the second least affordable city in the world after only Hong Kong. In 1970, the median house price in Sydney was $18,700. Fast forward to today, and that same house would now cost you $1.19 million. Even after adjusting for inflation, that's an increase of almost 700%. Australia also stands out on the global stage with its unique immigration profile. It boasts one of the highest proportions of foreign-born residents worldwide, second only to Luxembourg. Its history is built upon immigration, a tradition that continues to this day, making it one of the most multicultural societies on Earth. But Australia's housing crisis has now firmly put the spotlight on its immigration policies. Many argue that Australia's openness to immigration has created unprecedented levels of demand in its housing market, resulting in the excessive house price increases that we see today. But what if this widely held belief is fundamentally flawed? Firstly, it is true that the post-COVID era has seen a remarkable surge in immigration numbers. Australia's net overseas migration, which is the number of people who arrived in Australia minus the number of people who left, reached 547,200 in 2023, marking the largest influx since records began. However, when comparing the level of net overseas migration, or NOM, to the pre-COVID average of 223,000, the recent above-average surge is completely offset by the below-average levels during the pandemic. Throughout this period, significant numbers of international students, working holiday makers, and temporary sponsored workers left Australia. Since then, the number of these temporary visa holders has rebounded above pre-pandemic average levels. Many view this as a temporary catch-up in immigration from the period when its borders were closed, and not a lasting spike in new arrivals. Indeed, the last few federal budgets have forecast that immigration will soon return to its long-term average level. What counts for housing purposes is not the level of immigration, but the overall rate of population growth, as this is what drives demand for housing. Despite net overseas migration of over 547,000, Australia's population growth slowed to 1% annually in 2023, with a predicted figure for 2024 of 0.98%. These are some of the lowest population growth figures since the 1930s Great Depression, and are less than half of the 2.2% average population growth rate experienced between 1946 to 1970. Critically, those decades are remembered as a time of rapid housing construction, when the tradition of Australia as a nation of homeowners became established. Higher migration certainly means more homes are required, but when overall population growth is at its lowest levels since the 1930s, it seems disproportionate to suggest that a temporary jump in net immigration levels has had the impact on Australia's housing market that many have suggested. Indeed, Australia has been pretty good at matching dwelling construction to migration over the long run. In the past 10 years, apart from during the pandemic, the number of new dwelling builds has roughly matched the number of people coming in. It is only during the pandemic that a disconnect appeared, with population and migration first dropping, then increasing, while the number of housing completions and commencements marginally decreased. But again, the spike in net overseas migration since 2022 is offset by its stark decline during the 2 previous years, bringing it back in line with the long-term average over the period since 2020. A rise in international students has often been cited as a key driver of Australia's housing demand surge, particularly in the rental market. Indeed, more than twice as many international students arrived in 2023 compared to 2022. However, a report from the Property Council of Australia argues that international students are not to blame. In 2021, international students made up up only 4% of the rental market. Today, this proportion is more like 7%. In other words, international students make up a very small portion of the rental market and so have very little impact, if any, on Australia's housing trends. While international students have returned to Australia post-COVID, the increase in rents do not align with their return. In fact, between 2019 and 2023, median weekly rent increased by 30%, while over the same period, student visa arrivals decreased by 13% as most students returned home during the pandemic. This suggests limited correlation between rents and student visa arrivals. Australian Bureau of Statistics data shows that the majority of students are in private rentals, rather than in homes they own themselves or student accommodation. While this can have an impact on private rental rates, the impact of international students on the housing market is only concentrated in certain areas closer to universities, leaving rental supply in the majority of other areas unimpacted. There are also more domestic students living in rental homes in these areas than international ones. So, to direct the blame at only international students feels short-sighted. If it isn't all down to immigration, what has caused this crisis? At the heart of the issue is a severe supply shortage. The Australian government has significantly underinvested in housing for decades, resulting in a growing deficit of available homes. According to a former senior Reserve Bank economist, the national dwelling stock stopped expanding in line with overall population growth in 2001. Since then, the demand for housing has far exceeded the supply. This shortfall has been especially marked in the most populous states, New South Wales, Victoria and Queensland. As of 2022, Australia's housing supply was recorded at only 420 dwellings per 1,000 people, which falls below both the OECD average and most of Australia's peers such as the UK, Japan and Italy. Cultural preferences have played a role. Australians have traditionally favoured spread out suburban lifestyles over high-density urban living. This resistance to vertical expansion has hindered efforts to increase housing supply in city centres. When developers do propose high-density or medium-density projects, they often face significant opposition from local residents, a phenomenon known as NIMBY, or not in my backyard. The impact of these factors is stark. Approval rates for higher density developments have plummeted by nearly 35% over the past year and more than 50% over the last decade. New land settlements have decreased by 13.6% to approximately 74,000 dwellings. The approval process itself has become a major bottleneck, with settlement times averaging 275 days in New South Wales and over a year in Victoria. These supply constraints have led to dire projections. Housing Australia estimates a shortage of 106,300 homes between 2023 and 2027, while the Institute of Public Affairs predicts an even more severe shortfall of 252,800 dwellings during the same period. However, this supply crisis is not just about building more homes. It's about building the right type of homes in the right places. For many developers, the focus has been on high-end apartments and luxury developments to maximize returns, rather than affordable housing that meets the needs of the broader population. The consequences of this supply crunch are reflected in soaring property values. Low interest rates over the last 10+ years have also been a factor. These low rates have fueled a surge in property investment, as investors have taken advantage of cheap financing to seek higher returns in real estate compared to traditional savings accounts or bonds. This increased demand from investors has contributed significantly to driving up property prices. Furthermore, Australia's tax policies have played a crucial role in shaping the housing market. Negative gearing is a tax policy that allows investors to offset property losses against personal income, such as their salary when calculating their tax bill. As a cornerstone of Australia's real estate investment landscape for decades, the policy has effectively encouraged investors to borrow to speculate on housing prices, as any loss incurred can be used to reduce their overall tax bill. The result has been increased demand in housing from investors, pushing house prices out of the reach of ordinary Australians. In fact, data from the Australian Taxation Office shows that 1% of Australian taxpayers own nearly a quarter of all investment properties across the nation. In addition, there are almost 20,000 individual property investors in Australia who own 6 or more investment properties. The introduction of capital gains tax discounts in 1999 made matters worse by allowing Australian residents a 50% tax discount when they sell a property that they have owned for more than 12 months. These tax incentives have led to a surge in housing demand, significantly reducing the tax cost of buying and selling property and detaching house prices from income growth. While housing prices have dominated headlines, a silent crisis has been unfolding in Australia's rental market. In 2023, the national rental vacancy rate plummeted to a record low of 0.7%, leaving many Australians struggling to find affordable rentals. National rents surged by 8.5% in the year to April 2024, pushing the median weekly rent to a record high of $627. This rapid escalation is forcing many tenants to relocate to more affordable peripheral housing markets as they find themselves priced out of central metropolitan areas. The increasing popularity of digital platforms like Airbnb and Stays has played a significant role in reshaping the rental landscape. The short-term rental market grew in inner city and regional areas by 23% in 2022, continuing a trend of recent strong growth. This comes at the expense of long-term rentals, as landlords can generate higher rental income from these short-term lettings, particularly those targeted at tourists. The severity of the situation is further underscored by a survey from flatmates.com.au, which found that 48% of respondents are living in shared accommodation simply because they cannot afford to live independently. This statistic highlights the intense affordability pressures faced by many Australians, particularly young adults and low-income earners. The Reserve Bank estimates that the average number of Australians living in each home fell from 2.55 people in late 2020 to 2.48 people by mid-2022. This seemingly small change translates to a need for an additional 275,000 homes, significantly impacting rental availability and affordability. The number of single-person households in Australia has increased by 30% over the past 2 decades. This significant change is just one aspect of a broader transformation in the country's demographic makeup. One of the most notable trends is the delay in marriage and family formation. Young Australians are getting married later in life, with the median age at first marriage rising to 30.6 years for men and 29.3 years for women. This delay has a ripple effect on housing needs, as single individuals and couples without children often prefer different types of accommodation compared to traditional family units. Simultaneously, Australia is experiencing an increase in divorce rates. The crude divorce rate has risen to 2.0 divorces per 1,000 estimated resident population. This trend contributes to the growing number of single-person households and creates demand for smaller, more affordable housing options. While newcomers to Australia certainly contribute to overall housing needs, the changing composition of existing households is a more significant driver of the types and locations of housing required. Australia's housing crisis is a complex issue that extends far beyond the simplistic narrative of immigration. Moving forward, Australia needs a strategic national housing policy that addresses supply constraints, supports first-time buyers, and creates pathways to home ownership for younger generations. If you want to learn more about global economic affairs, head on over to this video where I show you just that. Thanks for watching, and see you next time.